Welcome everyone, my name is Mike Hamilton. I'm from Trade the Easy Way and I'm going to walk you through the market internals, in other words the main dollar and indices, and then drills down into some of the stock sectors I really like. What you're looking at the moment is the daily dollar, and you can see how the weakness of this daily dollar and the lower highs. So ever since we toppled over back in the last year, these highs have been lower and the lows have been lower. So unless this starts to turn around quickly and get back above this 100 mark, then this is coming lower. If we do see a resurgence of the dollar, then that could drag the indices and of course commodities right back down with it. Alright, so we could ultimately tumble down to February or January, February 22 levels at this rate. It's Fed next week. So judging by this, the market still thinks the Fed has completed its aggressive rate cycle, and we are potentially, according to these charts, we are potentially going to see some downside in the rates. Okay, so that is having, at the moment, this is having an impact on the oil. I'm really liking the oil off of this support here. There's the oil on a daily chart, and you can see this. So 71.12 was the 2022 lows. We breached, we came all the way down to 63.64. We've been as high as 77 recently, and now we are coming into this support. So what I'm seeing is, in terms of a pattern, I'm seeing this breaking up, it's broken out. Now this was a big box play. Once you break out of a box, when you come back to support a box, that's when this market can potentially really go. So that's why I'm buying these dips here. So that's in the oil. Let's have a look at the gold. The gold is already picking up today, first day of the week. And you can see we've got all this resistance up here at 1966. Volumes are picking up. The higher close in the daily chart suggests this has still got a lot more uplift. So 1940, 1950 appears to be the price to buy, because if we can get through 1970, then I think we can get back to these highs and potentially beyond. Right, so there's a potential nice head and shoulder pattern here. We've already broken up through the neckline. These pullbacks are getting bought, and that looks good. So miners are potentially something to focus on. Anything commodity related. We'll now stay on the commodity theme and look at the wheat. I am seeing further upside on the wheat. Similar story to the oil, head and shoulders, broken through the neckline up here, coming right back to find this trendline support, and now we could potentially wind our way back up in towards $10. So I'm a buyer down here. In terms of specifics, I'd obviously love to see $6.40, $6.50 again. We're where are we? We are 660, so I would like to see a deeper retracement into Thursday's price at 640, 650. That would really get me interested, but I am still a buyer on these levels, but I would add and top up that account into that support. I think something like copper is a good bellwether here. This is attempting to hold all this key support as well. We've already had a couple of nudges up. However, if this closes underneath this 85, then stay away. But if we can come down here and hold this and then subsequently stay above 85, then I think we can come back to these highs. So based on what I've just said about commodities and the dollar and gold, I think this PAF is well worth a shot, because if that can close above this 13.5, 14, volumes are increasing, Coming off of this March support, who knows, we may even get back up to that 20 and beyond, but I think that is well worth a risk. If we close underneath 12, then you might want to get out, and certainly if we give way under that 12, then we're potentially coming back to 10. So manage your risk and prepare for the worst and hope for the best. So keeping to this theme, let's have a look at Hochschild. Similar pattern. Volumes are not great here. Much prefer PAF at this stage. And Griffin. Ooh, don't like Griffin. Volume is coming out of that. I would stick clear of that. Let's look at the TGAT, Andy's TGAT. Ooh, no, that's giving way as well. Okay, so it's not across the board. So look at the US silver player. Yeah, so look at the volume coming in on this on the last few days. It's gone right up from 265 and it's up there at 310. Looking chirpier, looking like that could, particularly on that volume, looking like that could go back to 450 plus. So I'm liking that one or two of those miners. Let's look at the energy, because I think the energy sector is good. Let's look at Tullow. Nice moving Tullow on volume. So any pullback to, we're up there at 34, 33.5, 34. Any pullback to 31, 32 now is the place to get in if you want to get in on this. That's not to say that it's definitely going to hold if it pops back there, but because this is a lot of resistance. But very, very strong volume. So I think pullbacks on that volume, I would definitely buy a pullback on that volume. Let's have a look at the other ones. Let me go to my list. Yeah, let's look at hunting. So that's already had a big move, HTG. That's already had a big move. That's not pulled back. Once that's launched off of 198, that's pinged up very nicely. I would be patient for at least 235 at minimum. Don't chase the market. If it goes, just let it go. But hunting oil looks good. Right, let's look at the banks. Let's look at Lloyd's. That's looking right. That's holding up. Volume has been good on Wednesday. You might still see 33.5, 34. Otherwise, that looks capable of going back to 50 plus. All right. So I think being in the right sector is ever more important at the moment. So one or two banks, one or two miners, one or two oil stocks, and that's it. Otherwise, retail, I'm steering completely clear of, because if you look at Tesco's, just about holding on. Volume is not great. ABF, it's been on a decent run. Right up at resistance. Volumes are holding up okay. Card Factory. Wouldn't touch it with a barge pole. And before I go, let's look at Boohoo. Yeah, okay. Brilliant. Alright, hope that helps. I will, at long last, get more active this week. Clear the decks, get my head down, and looking forward to, well, I'm basically preparing for the autumn at the moment in terms of trading. Alright, thanks very much for listening, and talk to you soon. Welcome everyone, thanks for stopping by. My name is Mike Hamilton from Trade the Easy Way. I'm producing this market review at just gone 10 o'clock London time on Tuesday the 18th. This week we have US retail sales today, UK inflation tomorrow, weekly jobs in the US on Thursday. Next week on the 26th we've got US interest rates, and day after we've got GDP. So busy time ahead as usual. And what I'm looking at here is the daily dollar index. So the dollar index has done everyone a favour, well, particularly the US market, by dropping off. So US retail sales could have an effect on this. If we pop back above this parity mark, then the dollar could recover and start to wind back up, which could affect the markets, particularly with that rate decision next week. The majority of people in the market believe that the US are going to at least pause this rate cycle, this very aggressive rate cycle, the most aggressive since the early 80s, I believe. So if that's the case, the dollar could hit this resistance and then wind down further. So as usual, as you go into key data, you sit at a very, very important juncture, and then the decision, you need to rate what comes out of that and take a stand on the market based on that reaction. Right, let's stick to dollar related commodities. I like the oil here. I'm buying these dips in the oil right now around about the 74 mark, because this is a huge box play to me. We came into this box here and then popped back out again. We've been in this box for quite a while, since beginning of May and right into July here. Now we popped out. I think this is a major support. If I'm right, and I'm happy to be proved wrong and get out, if I'm stopped out, but if I'm right, we will break this high and pop back up to 80.85. If I'm wrong, we'll come back into this under 74 and potentially drift lower, or at least, very least, into that $64-65 mark. Alright, so I'm anticipating that is going to hold. I'm buying this support and looking to see if we can break up and hold above 75, and looking for at least 80, if not 85.90. Dips in gold have been buyable for a few weeks now. So we had this big run up here in March, dipped back into, as we got into the beginning of the summer doldrums, and now we appear to have a potential head and shoulders pattern here. So if we can break through this resistance, then I think we can get up to 2000 and beyond. We've got 2200 and 2350 plus up here if we can get above these 2075 highs. Alright, what we might do is bump into that, pause, and then pop up, pause, use that resistance as support, and then that'll be the new floor if we do this, and then we could run up to 2200 plus on the gold. So this is the Dow, and we have had this nice run from March, pop back into May, and then we've got a 1, 2, 3 corrective wave, pull back into support. So this is a bull flag. Any pullbacks around about 34,200 is buyable to see if we can then break and go back up to these highs. 35,000 is just above us, 500 pips above us. So that would figure that if we can hold here, we can go to at least 3,500 and then potentially higher before correcting. Obviously, if we turn around and close under 34,000, then sell and look for 32, for it to really sort of peel back. So whatever happens in that area there is going to be crucial. My money is on further upside at the moment, but be warned, FTSE. So 2-3 days of dropping right into this support from March. We get above 74.50, 74.70, I think we can recover. Whereupon this is going to be a major, this 7700 is going to be a major area of resistance. So FTSE is holding up at the moment. DAX is sitting up close to 23 highs. Same story, close above 16.3 and we could go to 17.5. Otherwise, if we bump into this and fail, then we could roll over and peel right back. Okay, so let's have a look at my favourite stock, wheat. Been going on and on about wheat for quite a while now, and I'm looking at this lovely drop. So these are 2022 lows. We popped up 22 lows and immediately closed, well, I'd say immediately, a couple of days later closed underneath. But now we've broken up from this trend line. I think these lows at around about $6.20, I think it is $6.15, $6.20, are buyable, and now I'm looking for this to get back above $7 and then run into these highs. I think this is a buying pattern. We're seeing decent volume on these lows, particularly on this low into $5.80, and so I'm looking for this to be wave 1, this to be wave 2, and then wave 3 to take us into at least $8.50, $9. Based on when we're talking about the oil and the gold, I think these miners are really coming into play. As long as this PAF can sit above 13, I think we're going back to 15, 16, and at least back to 20. And overall, if this really breaks out on volume, we see decent volume, I think this could pop up to 25 potentially. So I'm liking this chart, this sector. I think this sector is a good opportunity. If I look at Hochschild, that's doing it, but not on significant increase in volume. I'd want to see higher volumes coming to these. Sentiment is not doing it. So I think Hochschild and PF are the better ones at the moment. Let's look at energy. Talked about tallow over the last couple of weeks. So tallows had a nice breakout here. Look at the volumes coming in. Every time this dips, if you see this, this is a really crucial basic indicator. You know, volume is the lifeblood of the market. So if this is going to continue, we see another dip on volume around about the 30 mark, 32, then I think we could pop back up to 40, 50 plus. Again, if in waves over the coming weeks into the autumn, and potentially into the back of the year if that holds. This is hunting oil as well. This has popped up from 192, currently 260. Any pullbacks into £2, 220 are buyable. You know what? I would be patient. I wouldn't chase that market. If it runs without you, then leave it. But I think hunting oil is a good one. Right, I'm going to leave it there. I hope that helps, and look for further updates. Any questions, drop me an email or contact me through tradeeasyway.com, and look forward to seeing you. If you're not in my Telegram room, drop me a line and I'll post you a link. Thanks, bye.